All right, so welcome to the first part series of the foundation of trading. I'd like to start off by saying thank you to FXStreet for having me here again. As always, they're a good frontier uh, for getting access to some of the premium instructors out there. So, before ado, let's begin with getting to know a lot of you guys. Where is everyone from? Where are you guys located right now? Japan. Okay, great, great. I think that's the first that I've seen in a while. Africa, Iran, Indonesia, Venezuela. Okay, that's a first also. The moon. How you doing, Boyki? UK. Okay, for those of you in UK, especially in England, I am right now in London. So I tend to meet up with a lot of traders out here time to time. But I'm here for only another 2 weeks and then I'm off to Hong Kong again. And then from Hong Kong, I'll be going to Bangkok after that. So Canada, okay, okay. I was just in Montreal prior to London. Canada, a great place as well. Lots of good traders out there. Okay, so let's get started here. Now, one of the core things that we wanted to discuss today is the foundation. Now, how many of you guys have been trading Forex for over 6 months? Or have been at least attempting to trade it for over 6 months? Okay, so this has been going on for quite a long time for many individuals. I have constant people coming to me for training for some of my advanced courses, and they come in and they're hoping that it's some sort of a magic pill or something that maybe if I pay for an expensive course, I'll become an overnight success. Apparently, that's not the case, right? And the main problem that I notice again and again and again is a missing aspect from each trader is there is no foundation proper. You know, when I say support and resistance, there's six different variations that I see. When I say trend lines, again, 10 different variations of people drawing all over the place. When I say market state, how are the markets moving? All over the place. So how do you expect to pull an area to buy from or to sell from if you can't even read the market, right? So the very foundation of forex, it starts with the absolute basics. You have to master the basics before you move on to the advanced level. Okay, so the very famous saying in New York at prop firms is in forex, when you first start off, you need to put in 10x effort to make 1x worth of profit. But if you're putting in 2x worth of effort, you're going to get minus 3x. You have to give it all you got when you start. When I say give it all you got, I don't mean your bank account, I mean your efforts. Okay? Everyone with me so far? Ahmed, I travel the world in general, personally. I do also give seminars. I will be giving a seminar with FXStreet soon in Barcelona. So if you're in that area, you're welcome to come by. Okay? So the core foundations is very important. So now let's let's get into a little bit on core foundation. Let me open up a chart here. Sen, I will be in Japan towards the end of the year. Okay, let's open, let's see, let's say pound US. Something as simple as pound US. Okay, let's start with the ultra basics. And I'm going to surprise you guys as how many of you guys are probably going to give me an answer that is expected but is not correct. Let's start with this. What is a downtrend? What's the characteristics of a downtrend? Something very basic. Series of lower lows. Okay, what else? Lower lows and lower highs. Okay. What's the characteristics of an uptrend? Higher highs, higher lows. Very good. Jinsun John. Hey, I think I remember your name. I think you probably won a merchandise from us from Facebook, I think. Congratulations on that. Tommy G, at least three higher lows and three higher highs. Okay. Okay, so we have a different variation there. FX Boyke as the ICs. Okay. Now, when you initially look at this chart right now that's in front of you, what comes to your mind? Okay. You see the responses coming out? The thing is, everyone's looking for an area to buy and sell, but yet there is no consistency on what's currently happening. Okay? Fib retracement. That's always a common answer because a fib retracement can be drawn from anywhere and then it looks perfect one way or the other. Okay? Don't get me wrong, Fibonacci is a great tool, but exactly like the word I just said, tool. Remember it this way. A chef who cooks will cook no matter what. He will not complain that, oh, I can't cook because I don't have a specific frying pan, or I can't cook because I don't have my $500 knife. He will cook regardless. Same thing as a trader. He can trade regardless, tool or no tool. Now, this is why they call it price action, right? You read it from the charts. Now look at it this way. Higher high, higher low sequence. I'm going to walk you through step by step to a point where you're going to be like, oh, okay. Higher high. Shall we draw some circles maybe? Maybe that might help. Okay, we got a higher high here. Okay, and then we got a low here. Got a lower high here. And then an equally low there, followed by a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then what happened? Boyki, we can look at multiple time frames like that, but I want you guys to start to practice reading one chart. The more you bring in more information, the less we will perfect one thing at a time. And that's how the foundation is built. We need to perfect piece by piece first. Okay? Hi, Matt. Okay, so lower highs and lower lows. Okay, after this, the markets take a turn. They start going higher high, higher low, higher high, higher low. Now, what is a normal way for a person to trade? He looks at it like, okay, if I'm going to be looking at it in terms of Fibonacci, let's say, one of you guys said Fibonacci. So let's say I'm looking at this as a Fibonacci retracement like that. Okay? Now, most people in general, there's a strategy is 50% or 61%. No knowledge of the markets, nothing, just dead on 50%, 61%. That's what I need to do. That's my life. That's everything. That's it. Okay, but wait a minute. How are we getting there? You know, how are we getting to this area up here? So let's take a look here. Higher highs, higher lows, higher highs, higher lows. And then what happens here? What does this mean to you right now? Okay. Who can spot what I just showed you guys? Okay, Sandy, you notice a double top. What else? Oh, Smin, correct. The market's in a range here. Take a look at this. When you look at the markets like this, you start to realize The normal trending state that we normally do is it goes up, it pulls back, I'm going to pull out a buy from here, and then I'm going to go up again. It pulls back, support equals resistance maybe. I'm going to pull out a buy from here, and then it's going to go up again. Yes, but what if it didn't make a higher high and it made a double top like that? What are your chances of it making a higher low? Do you think like that? If you're not thinking like that and you're just looking for an area to pull back and buy, you're wasting time. Core fundamentals out of the window. You're wasting time. So in this aspect, when you see the markets going up like this, even if you draw your Fibonacci here, you're not going to get a bloody 50% on this. It has to come in deep. The reason why the market state is not trending anymore. Everyone with me so far? Makes sense? Yeah? So constantly your focus always need to be in reading the markets, not where's my entry? Where's my entry? This emergence from new traders, that the rush to pull a profit, the absolute rush. Most people come to my webinars and within 30 minutes they're like, tell me what I need to do now. You'll notice even in this webinar, give it a few minutes, someone's going to be like, oh, what do you think about Euro USD right now? Someone always comes up with a question like that. So it's always like they're very focused on, tell me something where I can pull the trigger now. We need to remove that from your mindset first. You need to learn to trade the markets and then forget the short-term vision. Keep a longer-term vision because it's the biggest career on earth. And you cannot build it overnight. Nor can you read a little ebook online for $99 and learn it either. It's not going to work. Okay. Now, it depends, econ data and news. Boyki, fundamentals do affect it. Right now, we're talking purely technicals for now. Okay? What do you think about pound USD? All right, so the market's going into sideways state. Okay, after the sideways state, when does the state change? It has now switched state to an uptrend. So once the state has switched back to an up mode, okay, whether we look at this as a breakout or a whole, change of direction, now our flow is, it was up, reverted to sideways, now it's up again. Okay, but what if I slow it down even more? Look at this massive down push. And look at the way this upward push, for those of you who are Fibonacci boys, look at this upward move. It pushes up like this, halts, pushes up again. It may halt again. Okay, it may halt again and do, something like this again or whatnot. And then it may push again, and then it might come down this slow. What do you think all this information is telling you? Very good. Downtrend still wants to go. If the buyers are so strong, how come they can't really step up their game? Okay? Always keep this in mind. Always keep this in mind. Is what is the market trying to tell you? You have to read it step by step. Now, if you're a 4-hour trader, then all the stuff comes into handy. But if you're simply watching the 60 minutes and you just want to trade the 60, it doesn't matter what the big picture is doing. Your concern is what's it doing right now according to what we just read, which is now it's in an uptrend, which means I'm trying to look for any strategy, any trading system or whatever it's telling me that soon a buy is going to come up. You can automatically be like, that trading system is going to work for that moment because that buy will work. You no longer have to deal with a 50-50 from a trading strategy or trading system. You pull out a read, your trading system is going to work. Okay? How do you know that it's not a pullback from a bigger move and not a trend reversal? Okay, so here's the thing. Farhan, now we can look at this as here's a pullback happening right now. We can look at this as a pullback happening right now. And then another pullback might happen. And then after that, the market just drops dramatically like that. When do we ever trade? Okay, so even if you look at it as a pullback, what is the information you're getting from it? What is the actionable piece? Okay, so the key elements is to understand what's it doing right now. Is it showing any signs of slowdown? Okay, whether it's a pullback or not. Here, if you guys were to take one thing from this webinar today, absolutely one thing, and if I have to put it in one sentence, is never put money on what is possibly happening, but always put money on what is happening. Does everyone understand that statement? Do not try to assume what the market will do and put your money on a guess or a hypothesis, but put your money on what's it doing now. This is why people say a trend is your friend, because you're going with the flow, and that's reality. It is not a thought process. Yeah, no need to guess the future. You'll see 80-90% of the people are trying to guess the future. Go to any forum, pop up into Forex Factory. Everyone's trying to say like, okay, once this happens, do this. Well, that's in the near future. What about now? Okay. Makes sense? Everyone with me so far? Any questions up until this point? Okay, I'm going to pull up another chart. We're going to do a read together. You guys are going to walk me through it so that way I know you guys are learning and not just here to hear my beautiful voice. Okay, let's pull up another chart. Any preference? Do you guys like any charts that you guys like to see? US dollar Swiss franc. All right. Okay. Japanese yen, Aussie yen. Okay. Well, we'll do US dollar Swiss franc, and as I teach you guys the next topic, we'll go into the Japanese yen pair group. Where's the USD Swiss? Okay. Forget what time frame it is. It's a random time frame. I need you to focus on what the chart is telling you, piece by piece. Now, first, as a visual person, when you first open this chart, what comes to your mind? Okay, Terry, this is tradingview.com that I'm using. So it's a fantastic company, and it's free, actually. So, okay, uptrend, long-term uptrend, strong. Okay, wait. Jinson John, long-term uptrend. Where is that coming from? You're focusing on the words here, right? June, July, August. Forget that. Just uptrend comes to your mind, right? Forget what pair, forget what time frame, forget the dates and the prices. The chart. It's up. Okay. How has it been up? Let's watch that. Now, at this point, right around here, the markets made a higher high. A higher low. Did we get a higher high? No. So, would that be an uptrend? No. Because it's not an uptrend doesn't mean it's a downtrend. Okay, so always remember that. Just because it's not something, it doesn't mean it's the opposite. Okay, the market continues. Now, it makes a lower high. Does that mean it's in a downtrend? Always remember, an uptrend, you need minimum of two things, a high and a higher high, a low and a higher low. We need these two lines to be there to confirm it's a trend upwards. In a downtrend, we need a high, lower high. We need a low, lower low. Yeah? So, if I say that this has come down, it's a lower high. Does everyone agree that it's a lower high? Yes, but do I have my bottom piece of a lower low? No, right? That should tell you I should not be doing this trade as a trend style because it's not in a trending mode. Okay? If your trading strategy is it makes use of trends, this is not a trend right now. So save yourself from any signals that come out. Okay? So some of you guys have labeled this as a wedge. Some of you guys can call it triangle, whatever you guys want to call it. The fact is, forget the vocabulary, learn what it means. Okay? We don't need the proper terminology. We're not here to be on CNBC. Okay, next thing. Moving forward, the market goes higher. Now this time, it makes a higher high. Does that mean it's in an uptrend? Very good, Sen. Not yet. It's pending. It's pending. Then the sellers take their turn. Okay? Creates a higher low. When do we know a higher low is created? What information tells us it's a higher low? Tommy, very good. It has to break past this guy here. Once it goes beyond this guy, the trend is on. No, because when you see a valley, this can be a valley too. And I can say, oh, that's an uptrend, or that's an uptrend, or that's an uptrend, or that's an uptrend. Which one is it? It's only when we go beyond this purple circle, then we know, okay, here's the low point that it dipped to. Okay? Sandy. Okay. I'm going to repeat this one more time. So the market has a higher high. We only know the uptrend is valid once this high is breached and it creates a higher low. Now, it has a higher low here, but the high is not breached yet until here. Once this high gets breached at this point here, that's when I can draw this line and be like, it's on. The markets are in an upward state. So all the way up until here, we're not in an uptrend. But visually, anyone coming to this chart will be like, oh, the markets are going up. No, it's not. Not until after this blue line here. Does that make sense? So this is the absolute basics. You know, we're going into where the markets are heading. And then your strategies, your systems, whatever you like to use. There's nothing wrong. You don't have to use what I use. It's whatever you use will start showing progress. Okay? So moving forward, the market starts to go upwards. It's a higher high here now. Okay? Once it makes a higher high over there, and we know we have a higher low, would you say a pullback for maybe a Fibonacci guy would work? These are the moments when the fib players will see their trades work. And it's at that moment, the Fibonacci guy's like, oh man, Fibonacci works absolutely perfectly. Well, if you use it alone, it won't work. But if you use it with reading the market properly, it will. Okay, so now this thing, what's it showing you here? How do we know that we're supposed to buy from here? Okay, how do we know we're supposed to buy from here? Something, again, we're going to go into very basic. How do we know? V formation? No, the V formation happens much later. It happens up here. Sen, backdoor. Hey, it looks like you're using a lot of the words I teach. V formation and backdoors and all that stuff. Good stuff, good stuff. Pullback, previous high. Very good, Alan. Previous high. It didn't break the previous start. Resistance becomes support. Glenn, also correct. Sandy, correct. Farhan, correct. Okay, so what it is this piece right here. Okay, those of you who are, if I'm saying you're correct and those of you who are not correct, trust me, you guys are going to win faster. I always bet on failures than winners. because they learn faster and they learn better. So, be proud that you fail. Be proud. Okay. Once we get a higher high, support equals resistance. Now, it is not just simple as support and resistance. Okay? What other piece of information must we know along with support and resistance? Okay, we already know the trend. The trend is an upward state. Okay, we know that. The trend is an upward state at this point. The pullback that's happening. Okay, Alan, price action. Need to know where the buyers are. No need to know that. No need to know that. Okay, any more guesses? We'll give it another 2 seconds. All right. So, demand, okay. So one thing we're saying is support equals resistance. Next, look at this flow downwards. How would you say it's coming down? It comes down, makes a lower high, makes a lower low. But how is it coming down? Is it smooth? It's grinding, right? That is an indication that the markets are struggling. The sellers are having a hard time. Now, the reason why I'm not going to tell you exactly where to buy right now is right now we're working with direction. To trade properly, you need 3 things. Step number 1, understand direction perfectly. I mean, you better not be wrong about direction ever. Step number 2, timing. That's a whole secondary stage. You need to work on your timing of when is the right moment. And then step number 3 is money management. Okay, so right now we're working on step number 1. And it has a lot to do with just basic reading of the market. Okay, so it struggles on the way down. A pullback occurs, and let's say whoever buys this here or whatever it is, they get in, it goes long a little bit. Would you say we now have a higher high? Okay. Market goes further. Let me just take one of these lines. Goes further higher. Sorry. Okay, whether you look at it up to there or up to here. Now, Keshav, grinding means it's choppy. It's like up and down, up and down, up and it's not smooth. That's what grinding means. Yeah? Okay, so the market goes higher. Now, take a look at it here. Would you say that's a pullback? No. I wanna drill this into your brains. When you see something like this slowing down up here, don't force a trade out of it. If you don't see a pullback, there is no trade. Leave it alone. Don't force it. It doesn't have to give you a trade every time. Now, follow what I'm going to say very carefully now. The market goes higher. And then it breaks this high, goes even higher. Would we say now that this is the next lower high? Okay, and then it pushes even higher. Would we say that now this is a lower high here? I'll use circle, sorry. Higher high, higher low sequence. Okay, now focus what I'm trying to say here now. How does it come down as a pullback? Okay, we are aware that there is support equals resistance. We're aware of that. Okay, that's simple stuff. But it comes on aggressive. Okay, I want to see yeses. How many of you guys are looking to buy this, and how many of you guys actually try to sell it? These strong candles that come out intimidate people because people are focused on what's happening live, and they move so quickly, the price action, people are like, oh my God, I need to sell this right now. Okay? They get into that sell, and unfortunately, they don't live long to see the next day. Okay? They comes to our support equals resistance here. But look at the action. It comes down till here. It pulls back 20, 30%. Comes down till here. Makes a double bottom. It pulls back 80%. Uh-oh, that looks interesting. It's slowing down. Then it pulls back down to here, and then it goes all the way up 100%. What happened to the sellers? Buyers are back. The flow is back on. We never had a downtrend to think this is a sell. We cannot sell that. Once it comes back up to here, this area struggle. If you this is a little bit going into advanced, that you'd have to go down one time frame to see a struggle back down to be like, here's the area for me to buy it. Okay, and you'll start to notice that whatever you had as your miniature lower highs and lower lows, it didn't happen here. It didn't make a lower low after that. In fact, it went all the way back up. The flow reversed. That's this mini move only, the pullback mini move. That's what we're measuring. Okay, and that's when most buys generate from here. If you can spot it here, great, but that's expecting too much from the market. Go with reality, take it safely here. Okay. So far so good, everyone with me? Yeah, no one's sleeping, yeah? Okay. Okay, moving forward. Okay, so the markets pull back, they start going upwards. What happens now? What happens now? Would you say that's a higher high? Okay, how much of a higher high? We have a higher low. We just made a higher low here once we get a higher high. Yeah, it tells us it's slowing down. We're like, something is fishy. It didn't go as high, which means I can possibly expect a deep retracement. Now, for a deep retracement being 50, 60%, what makes sense? A deep retracement, this area as a 50%. Otherwise, somewhere in here as a 60%. If you guys use supply and demand, this would be a demand area somewhere in here. That would make sense because it didn't make a proper higher high. It's slowing down. It means like, uh-oh, we're gonna get a deeper retracement. If it was a double top, I would probably hope it would be an even deeper retracement, so somewhere down here. But it doesn't mean I'm gonna become a seller. It means I'm gonna still try to buy it until I cannot buy it anymore. And then once the reality tells me I cannot buy, then that's the reality. I cannot buy. But I cannot assume at any stage. Yes? Can everyone repeat that after me? I will not assume after today. I will bank on only what is visible. Okay? So repeat after me. I will not assume. Scream behind your monitors. I will not assume. That is the number one killer for most traders. Good, good. All right. Now, what happens next? Creates a higher high, still makes the higher low, creates a higher high. Okay, look at this one. Look how deep this one came in. Does that mean it's in a sell mode? Okay, it's still up. It's still up. Okay, it comes down very, very strong, but you need it to slow down. When it comes down to 50%, does that look like it's slowing down? There's no green bars. And then a green bar shows up and it retraces 20%. Well, 20% sellers are still strong. Then it comes out, the seller barely makes it below the green bar, and then the pullback happens 70%. Okay, they're starting to slow down. Then it comes down again, and then it snaps. Well, for those of you who are supply and demand type of traders, well, what do you know? That's a demand area right there. So I'm just not going to pull the trigger because it pulled back. I'm going to pull the trigger once it makes sense. Once the market tells me it has nothing to do anymore. Okay, that's a very good question. Tommy G is asking, in the case you took a trade on this chart, there is no take profit level until you see price action against your trade. Okay, this is the way I teach my clients at Forex Watchers. You know, there's three things. There's three aspects to trading correctly for exits. The three aspects. Where do we go? Here we go. Okay, if you want to write these down, step number one is if your risk is 20 pips, your profit needs to be at least 40 pips. I would make that, you know, risk reward 2:1 minimum as a requirement. Now, how do we know if that 40 pips is going to come or not? We don't know. Step number two, how the market approaches the double of your risk makes a difference. You need to watch that. Okay? And step number three, if the trend slows down and you don't get a higher high, you need to exit it also. From these three steps, whichever comes first is an exit for your trade. A winning trade should not turn into a loss. At the very least, it should be break even or a scratch, which is a small loss or a small profit. Now, second point is you have to watch the flow of how the market goes up. Very good, Jensen. Very good. Okay. So all in all, I want you guys to tell me, after what we just basically discovered in the read of the flow of the market, how many guys can say you're confident now a little bit about direction? Now, did I have to do any research of, let me look at the US dollar market and then let's see what the banks are saying about the US dollar, or let's see what the Swiss franc is going to say. All of that stuff is what may happen. You're trying to predict the future. Do not assume. Yeah? Okay. So we got 5 minutes. Let's break it down to questions. This is a two-part series. So the next stage, we're going to go into trend lines and support equals resistance to perfection. I don't want any guesses on those things either. That's a very critical thing to do. Okay, so questions on this particular topic. Let's solidify this thing so everyone walks out of here saying, I know what to do. John, can you type a link to your website? Yeah, sure. Okay, it's forexwatchers.com. Please put this webinar on YouTube. Keshav, I think FXStreet will be putting it on YouTube. In fact, FXStreet usually has the full videos on FXStreet itself. Okay, so would you normally only look for buys in an uptrend and sells in a downtrend? Yes, but mark the words exactly as you said it, in an uptrend. That is what most people get confused. Is it still an uptrend? So remember that. Counter trends, I do trade it. I wouldn't recommend anyone starting off doing it. Perfect this method and then counter trend, next step. One step at a time. Perfect it the next. Boyke, can you sum up all in a few words? Okay, so who can give me a summary? Who can give me a summary of everything we talked about today? What did you learn from today's webinar? Okay, this is not just, let's attend Navin's webinar and it makes me feel good. It's not a spa. What did you learn? Okay, spot a real trend. Okay. Characteristics of an uptrend and downtrend. Good. Okay, a strong uptrend changing to a slower uptrend. Very good, Sen. Very, very good. Luis, shifting in trend. Good. Jensen, very strong point. Don't assume. Okay. Wait to trade what you see. Trade what you, Tommy G, trade what you see price action mainly, watching lows and highs and taking correct timing before entering a trade. Terry, where to enter a trade? That I haven't discussed that today. That's going to be a whole new webinar for that. Is perfection, is when to enter the trade perfectly. Okay? Understand how the buyers and sellers are moving the market. Okay, that it has to do with the flow, how they're struggling or how they're not struggling. Okay, exits. Yes, Boyke, that is correct. Exits, there was a 3-point approach to that. Yeah. Good, good, good. So now, here's the thing. Before I leave, I'm going to give you guys something I've given my members. All right. EuroCAD. I believe that was the one. Going to give the last few minutes. I'm going to give you guys a trade of mine that I've sent out to my members. So you guys can follow along and see how it works for you. Here's Euro. Okay, EuroCAD is one of them. And Pound Yen, Pound New Zealand should be another one. Okay, so EuroCAD. Darshan, how do you start the day? Like, what should you check? That's a whole new process also. I do a preparation of every day before I sit down to trade. It takes me a couple hours every day. Your pulse. All right, so market state. See how the markets are going down and down and down and down and down, and then suddenly they've turned around going upwards. I'm on the EuroCAD 4-hour chart. They're going upwards. It goes up to here, okay? It made a lower low, but then it didn't make a lower high. It made almost a double top kind of thing, almost. It's a very deep retracement. Pulls back, goes higher. Pulls back deep, goes higher and struggles. Okay, we're looking at this to drop. Okay? This should drop at least to our first area into here, followed by the next area into there. Should be a good couple hundred pips in there. Which time frame do you trade? Mostly 4 hours and dailies. Yeah, so that's one of them. And the other one, just really quickly before I go, Pound New Zealand it was. Farhan, yes, yes. You'll study it a little bit of why I'm saying it's going to go back down instead of an uptrend. It'll make sense. Just spend some time on it. All right. So, in Pound New Zealand, look at this. You guys see the strong down move? Very strong, right? Look at the way it goes up. It goes up strong. And then it pulls back. Then it goes up little bit. Then it pulls back. Then it goes up even little bit. Lots of tails showing up on top as well. Markets are slowing down. Now, whether you want to look at this at 50%, you want to look at this as support equals resistance, whatever the case is, for me, this is an approach to the first attempt to sell. A sell to regain control of the sellers who are coming from this side. Okay, so that's it for today, guys. Thank you very much for attending. I really hope to see you guys all in the part 2 series. How many of you guys are going to be here next month for part 2? Yeah? Good, 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 good. So I want to take a moment and also thank FXStreet for having me here. As always, it's always a pleasure to be here. I will see you guys all next month. Thank you all. Take care. Bye for now.